Hey traders, in this video I'm going to teach you how to read candlesticks and analyzing candlestick pattern in multiple time frame. So let's get started. You must be wondering what is candlestick, right? So candlestick is a technical tool used by traders to analyze price movements and interpret price actions. Candlesticks are so important. You basically trade the price action. You can read so much data out of a few candlesticks, understand why price action move like it does, and read it in individual candles. So in this chapter, we will be discussing on first, the basic of candlestick, second, OHLC, third is multiple time frame candlestick analysis, and fourth is example of bearish and bullish candlestick, and lastly, why is candlestick important. Let's move on to number one. First thing first, we have to understand there's two types of candlestick, bullish candlestick and bearish candlestick. Bullish candlestick represents that price are rising, and bearish candlestick represents that price are falling. So now let's talk about OHLC and what it stands for. Alright, so now let's talk about OHLC. Candlestick tells you four things what the price are doing, such as open, high, low, close. Okay, in short form, we call this OHLC candlestick. So let me explain to you in details of what this four component of candlestick. The first one for the bullish candlestick right here, this is bullish and this is bearish. The bullish candlestick right here, open is the opening price, okay, at the beginning of the trading session, right? And then high here on top of our shadow here, high is the highest price reached during the trading session, and low below your wick here, low is the lowest price reached during that trading sessions, and then close is the session's closing price at the end of your time frame. That is the closing price for that candlestick. All right, same goes for bearish candlestick. High is here. High is the highest price during the trading session. Open is the opening price at the beginning of a trading session, and then close is the session closing price, and low is the lowest price reached during that trading session that you're trading. All right, so this up here is our upper shadow, is what we call upper shadow. This is our body, and the lowest one is our lower shadow or lower wick, if you want to call it. Okay, so now let's move on to the trading viewer example of this candlestick. Now let's take a look at a real life example of OHLC. Now when you're looking at real life chart, you have to remember that those candlesticks are your story. Okay, so now let's take a look at this. On here you can see that this is the bullish candlestick. What do you see? The first thing is you have to mark that this is your highest wick. This is your closing price of that trading sessions. This is your opening price for that trading sessions, and this is the lowest price reached during that trading sessions. And for a bearish candlestick, if you can see here, this is the highest price reached during that trading session, and this is the price when the opening price of that trading session, the closing price of that trading sessions, and the lowest price reached during that trading session. Okay, so this is a real life example of how you can detect. I recommend you guys to start marking the OHLC on your candlestick just to get familiar with it first. Okay, so now let's move on to multi-time frame candlestick analysis. Okay, so now let's take a look at multi-time frame candlestick analysis. So candlestick pattern vary across different time frames. Okay, so on higher time frames such as daily, the candlestick provide a broad overview of the price trend. However, for lower time frames such as M15, the candlestick offers more detailed insights. Okay, so let's take a look at this. One or two bearish candlestick in 4 hour time frame represent multiple candlestick in lower time frame. If I go down to M15 on this same candlestick, let's say I go down to a lower time frame, right? So how many candlestick do we get from that? So there was only 2 candlestick in higher time frame. Now within that 2 candlestick in lower time frame, you can see multiple candlestick, right, in lower time frame. That is important to know that when you go to a higher time frame, inside that higher time frame candlestick, there's multiple candlestick in lower time frame. Okay, so now let's take a look at the example of bullish and bearish candlestick pattern. So now we start with the bullish first. The first one will be a hammer. As you can see here, this is the hammer candlestick. Okay, so this shows that buyers are stepping in, okay, due to the loss of bearish momentum, which then results in a trend change from downtrend to uptrend. All right, okay, the second one is dragonfly doji. The long shadow here indicating a bullish reversal signal, which then results in a a trend change from downtrend to an uptrend. Okay, now let's move on to my last favorite one, which is bullish engulfing. Okay, so now let's take a look at bullish engulfing candlestick. The reason why this is my favorite one is because it gives you the accurate point where a reversal is about to happen. All right, bullish engulfing candle is when bullish candlestick, all right, the bullish one is bigger, the body of it is bigger than the bearish candlestick. So that shows that the buyers are in control. All right, this is a real life example of how it would look like from bearish, and then there is engulfing, bullish engulfing here, to bullish. All right, so now let's take a look at types of bearish candlestick. Okay, so now let's take a look at the shooting star candlestick. So as you can see here, that the star candle have a small body and a long wick sticking out above the body. So this indicates that sellers are stepping in due to the loss of bullish momentum. So now let's take a look at bearish engulfing. Okay, so the last one is bearish engulfing candlestick. Okay, so the red candlestick here has engulfed the previous candlestick, which is the body of the red candlestick covered the body of the green candlestick. It indicates bearish reversal trend, which means sellers are in control. Okay, so now let's take a look at why OHLC is important and why do you need to know. Number one, candlestick can help us identify trends and patterns. Number two, it helps us to identify entry and exit points. And lastly, it sharpens trader decision-making process. We have come to an end of our topic for today. I hope you guys enjoyed today's topic. If you want to know more about what is $1 Million Circle, click the link in the description. In my $1 Million Circle community, you can connect with other traders to share knowledge and experience. So thank you for watching. If you enjoyed this video, please like, comment, and subscribe for more content. See you guys in the next chapter. Bye.